It's Lori Moore with the next session in your Business Doesn't Have to Be Taxing training series. And the first letter of the word internet, which is going to be our acronym for defining your business savings through strategic tax planning. As you might guess from this graphic, it has to do with insurance. And I've told you here that the cost of staying healthy doesn't have to make you sick. Now, some of you may disagree with me on that, but here's the current reality in the United States. Insurance has become basically mandated. So the good news is you're going to have coverage. And the better news is I'm going to show you how that coverage can benefit your business. There's something called the Small Business Healthcare Tax Credit. And for those of you who actually have employees, you can actually get a tax credit to offset those insurance costs. The reason that a tax credit is significant is because this is a dollar for dollar reduction in the amount of taxes that you pay versus a deduction, which is going to only give you a percentage of that money that was spent. So under this act, if you have employees, fewer than 25 full-time equivalent employees earning below $50,000 a year, then you can recoup up to 35% of the premiums that you paid. Now, I'm not sure how many of you may have actual employees, but just wanted you to be aware of this benefit. Now, note that this cannot be used for the business owner. It's only for employees. Also, self-employed insurance under the new Affordable Care Act, you're actually going to base the amount of your premiums and the subsidies that you get according to your modified adjusted gross income. That, for those of you who aren't familiar with the tax language, basically that's line 37 on your 1040, your tax return. So when you are being asked to determine what your premiums are going to be so that you can qualify for that subsidy, you can actually elect to get an advance premium subsidy based on the estimate of your modified adjusted gross income for 2014. Or you can go ahead and just pay the full premiums and claim the credit when filing your tax return. Now, keep in mind that although it might be a good tax strategy for you to choose the advanced subsidies in that it's going to be less money out of your pocket up front, if you miscalculate, you will be held accountable and you may have to repay that if your modified adjusted gross income is more than anticipated. So this is a question that you really do want to bring up with your accountant who can evaluate your own personal circumstances. Now, this is a huge benefit for your family, for those of you who have insurance through your business. Now, you can take the self-employed tax deduction for medical, dental, or long-term care insurance premiums on a qualified plan. Now, a qualified plan is basically going to be one that's covered. In other words, you can't just make up a healthcare plan and call it that and pay your premiums into your own self-directed fund. No, it has to be one available on the market that qualifies under the rules. And the huge benefit here that was just recently passed, in fact, I had a client that benefited supremely from this. He was the first face transplant recipient in the United States, and because of his age, he could not get the coverage for the anti-rejection medicines. But because of this change in the law, even though he was over age 21, he was able to get these very, very expensive anti-rejection drugs paid for. So keep in mind that if you have a child who's under age 27 at the end of the tax year, even if they're not your dependent, you can choose to cover them under your self-employed health insurance. Now, to qualify to have a self-employed health insurance deduction, you must not be eligible for an employer-subsidized health plan, and that includes coverage through your spouse's employer. And also, an important note, this deduction cannot exceed the earned income from your business. So if you have a business loss, then this may not be something that you can claim. But it's an incredibly valuable benefit as long as you can meet those conditions. So here is what I need you to do for it to take maximum advantage of this first portion of your training. This is what I call the action steps. And the I action step is that I want you to review your available insurance options and then select based on a balance of best coverage and optimal tax savings for your business. So again, sit down with your accountant. If you have an insurance planner, this is something that for those of you who do not have available options through your employer can be an incredible tax benefit for you just by buying something that you're required to buy anyway.